continue. What's also heartening, and I'm sure we'll talk about it, is the fact that private equity today is able to get exits in India. I remember when I started my career, if there was a private equity investor which invested in an Indian company, we would say, for an exit, oh, let's go do an ADR, let's go do a GDR, or let's find a strategic investor. But today the Indian markets are so deep that you can easily get exits here. So I continue to be very confident that private equity will continue. There are certain sectors they like more than others. As I said, IT services, consumer, they like the whole play on the Indian demographics. But off late, what is heartening to see is that not just private equity, but sovereign wealth funds have come in. The Canadians, the Middle Easterners, putting in very large checks, and they're going across these sectors. They're not just staying in the traditional consumer IT services where exits are very easy, but they're also going into infrastructure, roads, ports, etc. Renewables is a big play. So I think in India, I'm very positive that they'll continue. Emerging markets, I think the countries they like are probably the ones which play the China plus one strategy well, the countries like Taiwan, etc. Beyond that, I think the other countries will struggle because capital is scarce, leverage is scarce, so it will tend to find a home where you can have easy liquidity exits, and that's not too many of them.
Sanjay, you deal with, you are a seed fund. Also, you talk to a lot of these young startups. You mentor many of them, and at 100x.vc, you've sort of funded a lot of them over the last few years. In fact, what is your sense of the funding winter, which is the topic of heated discussion has been over the last 1 year or so? What is your sense, and how are we dealing with it?
I think. Whether funding winter is here or not, but fear is here, right? So everybody is worried about it. People talk about it. I don't see, we have got queues to get vehicles. Automobile is booming, kind of. Malls are thronging. Restaurants, you have to wait. Where is winter? I don't know, right? From a consumer side, we are not seeing.
But
yes.
PEVC funding has gone down significantly.
Yes, definitely. I mean, there are always excesses in the market, right? You will see excesses everywhere, and then it rationalizes, come back. It's a cycle, and when you are operating in this business, you have gone through those multiple cycles. We have seen. In fact, the way we believe is these are the times where the next giants of India will be born, especially in the startup story, right? We'll see across the new unicorns getting germinated in this era. So, I mean, you are not going to, as an investor, you don't miss vintages, right? This is a vintage which you would like to play out, you would like to invest across, create a portfolio, and that's how the whole story works across. You will see on the Series C and D side, yes, the momentum has slowed down. Earlier, we had fear of missing out, which is not there as an investor. We can take our decisions at leisure. In fact, these are the best times where companies can get great talent at a right value. That whole euphoria is off. So, cost of customer acquisition is down because you're not paying to Facebooks and to Googles of the world so much. So, in every aspect, this is great time to build a company and also to invest across. You get great deals. So, I think it's a great. So from a fundraising perspective, lot of that momentum which was there, yes, it has mellowed down in somewhat bit, but investing continues.
So, Manisha, coming to an investment banker's perspective, we've seen some of the storied startups last year really come to grips with reality in a pretty depressing sort of way in the public markets. So this whole private market valuation versus that in the public markets, where people, where the whole, what would I say, innards of the company are known to investors, and therefore the valuation, takes a beating. How does an investment banker like you see it? And do you think there was clearly irrational exuberance on the part of even investment bankers who seem to have advised the clients differently?
So you essentially called me here to beat me up, right? No, look, I think there was irrational exuberance. There's no question, right? There was just free money floating around the world, and basically you just have to have an idea and some execution abilities, and you found capital. So many of my colleagues, young colleagues, quit and joined as CFOs. 1 year into working, became CFOs of these companies, and you can see that they lack the experience or the tenacity to go through tough times. What is happening now, I would add to what Sanjay said, is a good outcome. It's led to a lot of pain. Some of the IPOs you mentioned, that people have lost capital. capital. But the outcome is good because I think now what capital is doing is following the real businesses. You know, you had Dilip Peramal talk earlier. That's a real business. There's cash flows there. There's a real business model there. And capital will now follow that or growth. It won't just follow anyone who has a business idea and barely has any execution abilities. So I think this is a good outcome. Companies which have, which address a large addressable market, have margins, have a path to profitability are the ones that will be able to come to the market. As far as, private to public, of course, the fact that these IPOs haven't done well creates some sort of hesitation in terms of deployment of capital. But I think private equity, don't forget, sort of looks at a 3 to 5 year horizon. And when they look at a 3 to 5 year horizon, the way our equity markets and the way the flows are coming in from all over, as I said, it's not just the traditional European and US investors, it's the sovereign wealth funds, the pension funds, all coming in. They can see that the depth of the market is improving. And actually, if you speak to a lot of them, they're happier because they're saying capital is now going into stronger business models. So I think this pain is welcome, maybe a bit discomforting in the short term, but in the long term, we'll come out as winners, and the business models which were actually stronger will be the ones that will sustain, just like in every other sector. I mean, why should tech have froth? Every other sector, the winners have taken it all, right? So tech should have a similar outcome and will have a similar outcome.
So Sanjay, you think the global tech meltdown, which which really took the whole world and the private equity and VCs globally really taken a hit, and therefore the impact was felt in India as well. How do you see that playing out, and how long do you think this whole reset period, if one were to call it that, will last?
So Saurabh, I mean, if you look into it, most of these discussions or the news are in the public market, right? Which is more of a secondary market. For us, we at Venture Capital, we do primary investment. We invest in the company. Capital goes to build a company. And when we invest across, we are investing for 5 to 10 years kind of horizon. So the kind of sentiments or the emotions which are flowing in the public markets typically don't flow across while we are investing across for that future, right? We invest on hopes while public markets are working on a quarter-to-quarter kind of results. So it's a very different temperament in the venture capital side.
But Sanjay, there are large venture capitalists who have also taken a big beating because of the kind of problems they have faced both globally and in India. So the large also be forcing people to the private equity funds to take a very hard look at some of the new investments. So do you think it's all that easy for us to say that it's okay, it will tide over in a bit?
It will tide over for sure. India at least is insulated from my perspective. I'm very bullish on India, and I would advise anybody betting against India not to kind of do it. But it's all about your, as an investment, it's all about your risk muscle, right? What's your appetite? Where are you seeing across investing? If you are investing, for a long-term basis, India is the only shining piece within the whole world where you got so many opportunities happening across. So I'm not at all worried across, even for the large VC guys who are coming at a later stage. Their entry points are phenomenal, and the companies are getting built out. And I'm sure with this signaling which has happened across the funding winter, the scare which founders have seen across the fund managers, everybody is alert. Everybody is tightening their belt and trying to see and steer the ship so that the things and the outcome are much, much better across, aligned to possible how the public investors react to the startups kind of stuff. So I'm sure we are quick learners. We'll learn quickly in that sense. And but there is a mindset with investors, right? Most of them, if you look into it, the fear of loss is more bigger and motivator than income kind of generating income. So I'm sure the sentiments will correct.
Manisha, you keep having discussions with the largest private equity players who want to come into India. You talked of sovereign wealth funds as well. We recently did a story in Business Today about the dry powder. Globally also and in India, people are sitting on a large amounts of dry powder but scared to deploy or maybe hesitant to deploy right now. What is your sense on that?
So I think, and if I could just connect to your earlier question also, I think the funding winter, as you call it, I think we're probably seeing the last leg of it. I think the markets have pretty much discounted all of the shocks, hopefully all of the shocks, the supply chain shocks, the war, China's reopening, which is actually a good thing if China reopens, supply chains reopen, demand comes back, exports will improve. So I personally think the second half you should see more capital coming in, you should see people deploying more capital. And through the whole last 6-8 months, to Sanjay's point, you've actually seen sovereign wealth funds, pension funds deploying capital quietly, right? They've actually even gone and bought into some of the listed IPOs that you talked about, which are doing poorly. They were, said there's a trade here, there's a rebound trade here to be done. But if you speak to all of them, just given what's happening globally, they see India as the only market which is showing growth. You and I debate and agonize on whether it's 6% or 7%. Don't forget the rest of the world, you're anywhere between -1 to 2.5, right? So, and at a scale, right, with the 5th largest economy in the world now. So I think you'll see deployment. You're seeing some deployment already. You saw a fund like CPPIB, which basically does minority investments, come and take a large majority stake in Renew Power. So that's how positive people are on renewables in India. India has 100 gigawatts of capacity in renewables. China has 10x of that. China literally puts on that capacity every year. So, things like renewables, etc., deployment has continued consistently. When will it become more wider? I think in the second half, with inflation coming down, rural demand coming back, I think you'll see consumer staples, etc., also see higher demand. So I'm quite confident that you'll continue to see capital come into India in larger volumes and values in the second half.
Sanjay, from your interaction with founders, where do you see most interest in? I mean, despite the fact that there is this whole, let's say, pause in funding, what are the new founders you speak to, the younger lot? Which are the areas where they seem to be bullish about? Tell us a bit about the few sectors you see a lot of action coming up.
So investment trends, in the startup early stage, a lot of innovations are happening in the EV space. So there are basic inputs which people see across. Like today, if you look into it, the industry incentives, the infrastructure which is getting created in EV is propelling the whole industry kind of. And a lot of the innovations are happening in the space. Like, for example, challenge with saying that batteries are getting fire or something. So there are new innovative battery technologies which are coming, the battery swapping, the infrastructure charging. So that's one space. Next is generative AI has been a big boom kind of. The AI earlier was very different than what we are seeing now. And with everybody hearing about the chat GPT-3 and, it's like a new brave world which is happening across. And a lot of the new businesses will emerge out of those generative AI kind of working. Then we see across a lot of the gaming kind of businesses which are attracting across, while for a lot of the businesses, gaming remains like a non-touchable kind of stuff, but those are massive businesses which are getting created in that space. So, tech is still continuing to take the lead in that sense. And D2C brands have been really emerging. It is like, threatening the existing incumbents in that sense, I would say, across a good amount of corporates. I mean, we work with a couple of corporates who are deploying large amounts of capital to get access to those startups, right? They want to be in that, having that seat on the table, see those category defining businesses very near. In healthcare, digital health, a lot of people are...
You're talking about family offices also?
Family offices, definitely, but those were more financial. Corporate venture capital is all about strategic, right? Saying that I would like to be part of those future businesses which will get created. While internal innovation is limited, how do I get those startups to work with the corporate? And that is which is driving quite a lot of significant capital also outside of the traditional VC fund. So a couple of our portfolio companies, we have got corporates who are our shareholders who are on the same cap table. So corporates are having a lot of interest in startups.
You talked about gaming, Sanjay. I must say, I mean, you've been one of the very early proponents of the crypto craze in India and otherwise as well. You've been a great advocate of the crypto space. Now, recently at another summit of Business Today's, we had the governor of Reserve Bank making it very clear once again that he is in favor of a total ban on crypto because he says that there is no underlying asset. Now, what's your sense of where the whole crypto world in India and in the emerging markets will be playing out?
Just on the Saturday, we had our 100x VC pitch day. We announced 4 deals in Web3 space. So, I mean, people have a misnomer. In that sense, I wouldn't say anything against the regulator. But the idea is this space needs more regulation than ever before. More people are joining. It's better to have a regulation. Like, for example, people talk about FTX. Now, that was a challenge because there was no regulation. Assuming an exchange having the ownership of an asset, why don't you have a custodian outside? Like no exchanges hold across the asset. The FTX wouldn't have happened. So today in India, if you have a custodian and the exchange, which are crypto exchanges which are separate, things will never happen across. So today we have got taxes or TDS on doing a trade. A lot of the Indian investor floated their digital assets on FTX. There is no respite, right? So I mean various things. If the space will get regulated, it will just boom kind of stuff. So hopefully regulators take a cognizant of this space and see the kind of momentum which is coming across. It will have to regulate it some.
But in India, you don't see it completely dying down over the next few years.
It's impossible.
Yeah.
You can't stop,
right? You need regulation is basically.
That's it. That's the only way how you can build the Web3 or at least manage, be party to it, right? Government themselves have started with their own digital currency, right? And it will evolve across. And we have seen every new areas, right? We never had an e-commerce regulations. Now we have an e-commerce regulation. We never had for Uber, Ola, transport. Some of the instance happen, government comes with a regulation, right? It is always, innovation will always lead it. And then the regulation will follow across. So that's how I see it.
True. Manisha, I'll split my question into two. One is, which are the areas where you see PEs and sovereign wealth funds coming in and really looking at, particularly in India, which are the sectors you see them really getting interested in, number one. And number two is, do you see as IPOs also get withdrawn? Many of these IPOs which were planned are waiting. Some of them have been called off. Do you see that because of PE exits? Do you see a lot of consolidation also coming up in the next couple of years maybe?
Yeah, I think, look, with the IPO market getting a little lukewarm, definitely, there are more opportunities for private equity. There were a lot of consumer, retail opportunities, tech, which basically became unsustainable for a private equity to invest in. Today, all those companies are back at the table talking to them. So that will be something that the PEs will definitely get more active on. I think, as I said before, 2023, private equity will play a much more active role just because of what's happening in the public markets. Exit is not a concern for any of them. Sectors, basically consumer, pharma, whatever plays on the Indian demographics is something that's very attractive. I think what we've done sort of in the last few years is the structural reforms that India has undertaken. We've used technology as such an inclusive tool that we basically integrated Bharat with India. So, you've got 60% of rural India, which basically now through e-commerce, etc., is integrated into the mainstream. Then, you have disruptive technologies like you have ONDC, OCEN. The OCEN will lead to, more disruption with banks, traditional banks. You'll basically have cash flow lending, so that will lead to different fintech models. ONDC will lead to more sellers and buyers coming onto the more formal platform. So all of these brands which you and I don't even know about through rural India will get capital because they have such access and reach and distribution. We hear about a lot of large cap multinationals saying growth is slowing down in rural India. When I talk to people in rural India, they say that's because let's say a Tata Salt is replaced by a very domestic brand which you and I haven't even heard of, and that's now getting such scale, governance around it because of certain VCs going in, that you will see capital follow there too. So, much wider capital flows will come in, much deeper capital flows will come in, but I think they will definitely follow cash flows. I think the days of just following an idea and just top line and, companies which were just racing to get that growth number because we were all getting valuations which were a multiple to sales, those days are gone. Where's the EBITDA? Where's the cash flow? Where's the earnings? That's the mantra now.
Do you also see some of these IPO plans coming back but in a much more realistic valuation level?
Absolutely. Not just as IPOs, you may just see reverse mergers into listed companies. You may see consolidation into large caps. A lot of the tech companies, as you've seen, the large caps in India, the traditional companies are integrating with them, Reliance, Tatas, Birlas, etc., leading. Because, also online and offline need to be combined for the last mile connectivity. So you'll see mergers. You may see mergers into listed companies. You may see mergers of scale. And then come back into the public markets with a more sensible, scaled-up idea. So definitely, I don't see people saying, look, nobody's throwing the baby out with the bathwater. People are saying, come back with a sensible business model with valuations linked to EBITDA, and then there is a positive outcome.
You agree, Sanjay, that the valuation, craze has now completely gone, and now we will be witnessing a stage of much more realistic valuations overall?
See, as an investor, you change colors continuously. Right? If you say that, okay, I'll be doing this only, and you have no market, right? So, as an investor, you change positions as the market changes its, color kind of, and you align to it. And that's where things are happening across, where the sentiments were bullish, people were able to price, at a different level. Today, the founders understand, the investors understand, and they price it at a much different level. But the underlying thesis of saying that are investors or retail investors interested in new age companies, I would definitely say yes. Look at the kind of numbers what a TV show is getting. Like, it's now touching to what IPL was. It's crazy. It's unbelievable the way people are viewing that. It's a reality show, but the way it is being accepted and people are talking across, including, a lot of those guys who never understood how startups work, suddenly come up to us and ask across, is this how you behave? No, we don't behave like that, kind of in doing a transaction. So it's unbelievable. India, everybody is now looking upon startups and new age company with a much different lens.
We are running out of time. Manisha, I think I'll just ask this question to both of you, but first to you, Manisha. This also brings us to this whole issue of governance. I mean, that's been a recurring theme over the last 1.5 years in terms of the kind of tremendous unfortunate incidents we've seen in some of the storied startups. I don't want to get into names, but we all know who they are. What is your sense? Are startup founders, private equity, venture capitalists getting much more, tough on these, and what is the way out? Do you think there needs to be a solution of some sort coming together where the funders come together and insist on some kinds of, sort of checklist before they put in money in terms of these companies?
So sort of exactly, the answer is in your question. Basically, a lot of the investors have got together and they're forcing governance around the founders, forcing professional management teams, a lot of the CFOs, CEO, divorcing the role of the founder from the CEO, having proper accounting firms. I think all of that's being done, and I know of a lot of my clients who are investors who are basically coming together and saying, look, these outcomes have to be forced on the founder because what was right for the company in the first stage. And always it's not just a governance issue. It's the issue is that what's right for the company in the first stage, the founder doesn't evolve the company into the next stage where you need a deeper management team. So, what seems as governance to outside is basically because the founder is holding on too tight and the company is basically gone beyond the founder. And I think we as Indians didn't actually force these kind of outcomes. We don't have activist investors like the US has, where even the large caps, the CEOs get thrown out by these activists.
It's happening, but not too much.
Happening, but not too much. US and Europe, it's a big business, right? Activism. It's not the case here, but it's happening now. Maybe not as aggressively as in the US, but definitely investors are very clear that they are not going to have the kind of tolerance that has happened in the last two years, where the founder basically convinced them that he's invincible and to the company, and without him the business model doesn't exist. I think everyone's moved beyond that threshold.
Sanjay, you see founders becoming wiser now after the hits of last time? I mean, hits in a negative sense?
So I wouldn't put founders in that bucket, because most of them have good intentions. A lot of the circumstances with the board members and stuff, I would take that responsibility where ethics and governance has to be part of the board and driven through that kind of. So I would take it one level up in terms of how active the board is, right? How actively you are working with the founder. And if you have the right questions, definitely founders will align kind of stuff. So ethics and governance has to be part of the board. and it's more responsibility coming to investor, we as an investor, to drive that whole ethics into the mind of the founder and or the founding team per se.
Let's hope that wiser sense prevails, and we are again back to seeing startups doing well and new age companies in India doing well, and the funding coming back in good form. Thank you very much for this lovely session. Thank you.
Thank you, Manisha. Thank you, Sanjay. And thank you, Saurav. Our next conversation dives into the coming of age of retail investors. It's the big trend that's taken the market universe by storm and really kept momentum going in the last couple of years, as we've seen through the pandemic and post, well through most of the uncertainty and volatility that we have seen on account of primarily global factors. In conversation with Siddharth Zarabi, Managing Editor, Business.The Television, I'd like to announce our next set of guests. And it gives me great pleasure to welcome some of the biggest names in stock markets when it comes to the Indian markets. Nilesh Shah, MD and CEO, Kotak Mahindra AMC. Vijay Chandok, MD and CEO, ICICI Securities. Basant Maheshwari, investor and author, The Thoughtful Investor. And Dheeraj Reddy, MD and CEO, HDFC Securities. A power-packed panel, and these are eminent speakers whom we often go to for insight and guidance and anything that will help us understand better. So this promises to be a fantastic conversation. Siddharth, over to you.
That's how it is. Good afternoon. A very warm welcome to this fantastic panel. I am personally very happy to be moderating this stellar panel. Nilesh Shah, MD and CEO of Kotak Mahindra AMC. Vijay Chandok, MD and CEO of ICICI Securities. Dheeraj Reddy, MD and CEO of HDFC Securities. And Basant Maheshwari, a thoughtful investor who invests and writes. Glad to have you on the stage here. The big question that I want to start today's afternoon with is, how does one become Rakesh Jhunjhunwala? How does one become Warren Buffett? Because this is a question that a lot of the new age entrants, the retail investor, asks, and the topic of our session is the coming of age of the retail investor in India. Almost 106 million demat accounts, 15-year high participation as far as retail investors are concerned in stocks. So how does one become Rakesh Jhunjhunwala or Warren Buffett? Nilesh, I'm starting with you.
सिद्धार्थ भाई, अगर मुझे मालूम होता तो मैं बन जाता ना, आपको थोड़ी बताता.
That's a good one. The same question, Vijay, to you, and then I go across the panel on the same topic.
Okay, that's a serious question.
Yes, that's a serious one.
So I wish I knew. But, you know, from whatever I've heard and observed, I think people like him and other very successful investors have got some traits which kind of cut across. I think one of them is their ability to take risk, identify trends ahead of others, stick to their conviction, have patience. At least some of these traits they have displayed, but I still don't think that really makes up the man.
Okay.
There's so much more than that.
So much more than that. Dheeraj, the same question to you.
I'll add to what Vijay said. I think
If you could keep the mic closer. Yeah.
other than what Vijay said, I think the passion and having a heart and soul for the investment and wealth creation is something a start point. I think after that you have to build it over a period of time by acquiring knowledge on a regular intervals and making learning as part of the sense of the investing. I think that's something will add to, while it's very difficult to emulate Rakesh Jhunjhunwala or Warren Buffett, but you can get closer to that with these trades.
Basanji, just to follow up on Dheeraj, for those two people, even if we get 0.1% closer to them, most of us in the hall, we will consider ourselves through. Go ahead.
Yeah. So I think Rakesh Jhunjhunwala, if you want to be one, no financial planner will ever advise you to do what you should do to become Rakesh Jhunjhunwala. First is you have to have intelligence, passion, excessive risk-taking ability, and huge leverage. So the moment you think of leverage, people will say, "Arey pagal hai, mar jayega." So that's how you start. Warren Buffett is more of an, I think, entrepreneur than an investor. He manages people, he manages money rather. So that is possible. And plus for Rakesh Jhunjhunwala, you need the roll of dice to fall in your favor. That's more important.
Nilesh, I'm coming to you because many of the questions that we routinely get asked, and you are also routinely asked, is about comparing 2022 versus 2023 from an outlook perspective as far as the retail investor is concerned. This story is very well known, how millions of Indians have taken to investing, but as 2022 taught them, there is a downside also. So to address that big sort of fear in the room, how does a retail investor in the Indian markets protect the downside that is likely?
So the only way to protect downside is through asset allocation. You follow your asset allocation strategy, take risk what you can manage, buy when things are cheaper and sell when things are expensive. सिद्धार्थ भाई, ये सब बोलने में बहुत इजी है, करने में जान निकल जाता है. And maybe I'll take a minute to put the lighter side and then leave it to others for serious side. There is this couplet in Mahabharata where Krishna Bhagwan goes to Duryodhan before the beginning of the epic battle and says that, why are you fighting? They are your brothers, give 5 villages. And Duryodhan doesn't agree. Krishna is Bhagwan and yet he can't convince Duryodhan. Duryodhan replies to Krishna after a lot of persuasion, Janami dharmam nachme pravrutti, Janami adharmam nachme nivrutti. Oh Lord Krishna, please don't tell me what is dharma, what is right. I know everything, but I can't follow it. And don't teach me what is wrong, what is adharma. I know it fully well, but I can't desist from it. So हम सब में एक दुर्योधन आज भी छिपा है. वो कहता है कोला मत पियो, जंक फूड मत खाओ, बट हम लोग उसको फॉलो नहीं करते. Same thing is in finance. Everyone knows the 3 mantra of regular investment, long-term investment, discipline, asset allocation. But वो दुर्योधन पे काबू कैसे लाए? So जब तक दुर्योधन पे काबू नहीं आएगा, तब तक आपकी wealth journey ऐसे ही रहेगी.
That's a good one, Nileshji, because I think for the next time this is a lesson to us. We should perhaps also do a session with spiritual gurus to avoid the Duryodhan when it comes to investment. Vijay, how does one avoid Duryodhan? Because the point that Basant also made and all of you have said, intelligence and passion, if I were to take up only those things, intelligence is something that you are perhaps born with, passion is something that you can develop. And if one lacks these, is he ruled out of the markets?
So, actually, if you see the current context and look at the bunch of investors who are coming, so first and foremost, I must tell you, they are very, very smart guys. They're young, very smart guys, and they're coming from not just the top cities, but Bharat. Second, they are pretty well read. I think what is unique about these youngsters coming to the market is, I think technology, digital stuff that's been happening over the last few years has given them access. They are, I don't think, there's something called cosmopolitan. If there's a cosmopolitan, world cosmopolitans, I think these guys may be coming from a small town, but they would know what's happening globally. Very well connected through various social channels. So they are not necessarily sort of they have access to data, information, research, content, processed outcomes. So, I mean, if you don't have the intelligence to do it yourself, there is someone who's really able to do that. So that access and availability is there. And when we've seen this behavior this time of investors, I would observe that, yes, there is pain, but there's no panic. And I think one of the reasons why I would say that there is pain but no panic is because I think leverage, and I think Basant mentioned that earlier, leverage in the market relatively, at least in the retail side, is very, very low. And when there is low leverage, there is a relative sort of panic doesn't sort of creep in. So in the sense, I would just add that information is available, research is available, not very difficult for them to access, even if you don't have that intelligence. You can access it. It's pretty. Lots of tools have come. That's another way of dealing with.
That's a very good point. The role of technology, because 20 years back, I don't know how many people would recall here the process of opening a demat account, and now look at the process of onboarding on a demat account. Look at the kind of velocity of transactions that you can do using your smartphone. A lot of people of the newer generation that you spoke about do that. Dheeraj, I want to come to you and pick up the point about the difference in the retail investors this time around, because the market, one of the truisms is that the market is full of cycles, and we see cyclical investors also. Of the active users on NSE, we have seen a slight drop in October, but it's the 5th consecutive month drop from June. It's the last data that we have is only 36 million. Is that indicative of retail investor interest peaking because of the ongoing volatility, or is it something else?
I don't think so. It's peaking yet, because the retail investors are signing up more and more demat accounts. So we are seeing good inflow of new customers sign up across the industry. So I don't think so it has peaked up. I think in last 5-6 months we've seen less active monthly users as compared to 1.17 crore what we had in as peak customers, and now it's somewhere close to 89 lakh customers in the December or November 2022. So it's just about little bit correction in terms of monthly active users, but we are seeing good and more interest into the markets. What Nilesh mentioned, that when other asset classes like debt or gold become attractive, some bit of shift happens to these kind of asset classes also. And also when there is more volatility, some of the investors take their own time to participate in the market, and they get a little bit more calibrated. But having said that, the financialization of savings as a trend is just on the cusp of even further exponential growth.
What sort of ideal equity allocation or a basket would you propose at this time? Debt versus equity versus other assets?
Siddharth, this is a very generic question, and there's no one-size-fits-all answer to this question. This depends on the age, risk appetite, and understanding of various financial instruments. So one has to really do this for an individual investor and not a ballpark number. But the most important thing, what Nilesh has also highlighted, that we should not undermine the importance of asset allocation and stick to that asset allocation discipline. So in any investment process, there are 3 steps. One is decision, second is execution, third is tracking. So one has to not only decide which asset classes are suitable at the time of the investment, then of course execute the same, and then on a continual interval one has to track that how the portfolio is performing, whether their asset allocation is right and is aligned to the market conditions or not. So it's a process. There's no one-size-all-fits solution that is available that I can recommend.
That's a wonderful answer. Yeah, Nilesh, please.
सी आपने ट्रेडर के लिए, ट्रेडिंग के लिए, इन्वेस्टर के लिए पूछा था कि इन्वेस्टर साइक्लिकल होता है क्या? बट इन्वेस्टर इज नेवर साइक्लिकल. इन्वेस्टर इज लॉन्ग टर्म. एक बार चालू किया जिंदगी भर करता रहेगा. ट्रेडिंग इज सीजनल. वो आता है, पैसा खोता है, फिर निकल जाता है, फिर उसका रिलेटिव आता है, वो भी पैसा खोता है, वो भी निकल जाता है. So trading is seasonal. Investment is long term. Trading is like flirting. Investment is like शादी. 7 जन्म तक आप इन्वेस्टिंग ही करते रहेंगे.
That's a good one. Can I do a quick follow-up before I go to Bazan? Nilesh, to you itself. The sort of broader question, therefore, should one invest looking at price, or should you invest in a company and ignore price?
So there is a philosophy, buy at any price. It is called BAP. Then there is a philosophy which is growth at reasonable price. That is CARP. Then there is a philosophy which is growth philosophy. Then there is philosophy called value. So there are many things. There is no one way to nirvana. You have to do what you think is appropriate.
आप अपने भगवान को पूजिए जैसे भी पूजना चाहते हैं.
Precisely. But investing karna, trading mat karna. Trading is a very, very hard way to make money. India's
And an easy way to lose money.
Oh, for 99% of the people, it is a way to lose money. And on trading, I'll say just one thing. India's best known trader is Radhakishan Damani ji. वो फ्लेम इंस्टीट्यूट पूना में थे तो किसी ने पूछा कि सर मैं आपके जैसा ट्रेडर बनना चाहता हूँ, कैसे बनूं? तो उन्होंने बड़े प्यार से कहा कि देख बेटा, मैंने अपने बच्चों के लिए ना डीमार्ट खोला है, उनको भी ट्रेडिंग नहीं करा रहा हूँ, अब तू रहने देना भैया.
Basanji, I'm coming to you, and the question is more to sort of get your view on what happened in 2022. We saw post-COVID a wave of people coming in, घर पे बैठे थे, extra time था, work from home था, and for many people there was no work either in office or home, they were laid off, and we saw this surge. And they entered new age companies. The panel has told us that technology, the ability to buy at a button, greater information. There are, several dozen registered entities and several thousand unregistered Telegram, WhatsApp channels who keep offering you all manner of tips and guidance. But a lot of retail investors have burnt their hands very badly. New age IPOs is one example. Have they learnt lessons, or is 2023 likely to continue to teach these new age investors harsh lessons of investing?
I think losing money in the first couple of years of your entering market is normal. It's like breathing in and breathing out. We all lose money, then only we learn. If you don't lose money, you will not learn. But what has happened in 2022, 2021, 2020, courtesy WhatsApp, Twitter, Telegram, and all those quick communication channels is the cycles have become compressed. So everyone wants to get out of the same door. Everyone wants to come in through the same door. आप मीडिया में आपको जो पता चलेगा मैक्सिमम 5-7 मिनट के लैग के बाद मुझे भी पता चल जाएगा. आज से 20 साल पहले जो आपको पता चलता था मेरे को पता चलते चलते तो बेयर मार्केट बॉटम होके ऊपर होने लग जाता था. So the compression of the cycle first, and secondly, on the previous thing, I think these newcomers have got a lot of intelligence. They want to read, they want to understand. What they really lack is experience. And that is why when they hear of recession and Amazon putting 18,000 people off the job, वो पहले आके शेयर बेचते हैं कि अब तो रिसेशन आ गया, खत्म हो गया. फिर उनको लगता है नहीं फेड शायद उतना काटेगा नहीं, फिर वो खरीदते हैं. Because they don't have experience. So what they read, what they hear, that is what they perform. And stock market, I think, is as much experience, as much psychology understanding as it is about intelligence. So the negative part for this new age group from our perspective, from a general markets perspective, is they have compressed the cycles, and secondly the volatility has increased through the roof because हर 2 मिनट पे बेचना है, हर 2 मिनट पे लेना है.
So is the risk appetite different for this current crop of investors?
No, they have no risk. वो 2 लाख की सैलरी में से 20-25 हजार रुपए डालते हैं और पुट खरीद के चले जाते हैं, घर वापस आ जाते हैं. रिस्क तो हम लोग के लिए बनाते हैं, वो जो हमारी सारी संपत्ति लगी है स्क्रीन पे. वो तो 20,000 का पुट लेते हैं और वो पुट बिक गया, कर गया, हो गया. They are playing play with lotto basically, most of them, and which is good for brokerage companies actually.
बारात में खुश होके जो ज्यादा फायरिंग करता है, that is the kind of risk that you're talking about.
I just want to make one additional comment. Lots of tools have come. And these tools enable you to enter into a trade with locked-in appetite of risk. So you know that's the max you can lose is X amount. You lock that amount in and you hit the trade. Tech and analytics, combination research, all that has made it possible to make these things. So I mean to say that these guys have lost their shirt, maybe a little taking it too far. I think there's pain, but there's no panic.
Okay, there's pain, there is no panic. And since we sort of agree as a panel on that, Nilesh, I'm coming to you. And we started this conversation, it's the same question really in a different way. Therefore, how does a retail investor in the Indian markets in 2023 try to generate alpha?
Okay. So alpha is relative to the benchmark index. Your benchmark index could be much higher versus mine versus which is. So please first find what is your risk appetite. If you didn't buy during March 20 correction, that means you are not an aggressive investor, you are conservative investor. So, आज बोलना बहुत इजी है कि मैं तो एग्रेसिव इन्वेस्टर हूँ भैया मार्च 20 में जब अपॉर्चुनिटी तब आपने नहीं खरीदा तो यू आर नॉट एग्रेसिव.
तब मगर डीमैट अकाउंट भी नहीं था मेरे पास, मैंने सोचा नहीं था, बाद में पता लगा भेड़ चाल हो गई.
सर अब पेनल्टी गोल मिलता है तो वहीं पे फायर करना पड़ता है. आप ये बोलो मेरी स्टिक अच्छी नहीं है, बॉल ठीक नहीं था, वो गोलकीपर रेडी नहीं था, बस वो तो अपॉर्चुनिटी गई. सो वन, प्लीज बी ऑनेस्ट टू योरसेल्फ. Are you conservative investor, aggressive investor, average investor, whatever it is? Second, what is your investment objective? Everyone wants to make money, but making money is like बिरबल की खिचड़ी. उसमें टाइम लगता है पकने को. As Warren Buffett mentioned, so someone asked Warren Buffett कि भैया आपके लिए तो इतनी सारी किताबें लिख दी है लोगों ने, तो is there any secret left out? तो he said no, there is no secret left out. मैं जो करता हूँ सबको मालूम है. So then how come other people have not become like Warren Buffett? So he says, my style of making money is very, very slow. People don't have patience. So be clear why you are investing. Making money is not the reason you are investing. You have some objective. And then based on your risk appetite and objective, try to build a portfolio. Some fixed income, some equity, some real estate, some gold, some offshore assets. That portfolio should give you real return. Compound karte raho, eventually you will make money. Now in 2023, for equity market, it is more like buy on dips market. If you look at from a fair value point of view, with the caveat that market does not necessarily always trade at fair value. In bullish sentiment, it will be above fair value. In bearish sentiment, it will be below fair value. But from a fair value point of view, the entry level of Nifty in 2023 and exit level of Nifty in 2023 should be similar. We expect Nifty EPS to be about 1,000 rupee anywhere in calendar year 24, but more towards December 24 than Jan 24. So 18 times 1 year forward, 18,000 Nifty looks like a reasonable fair value number. So if markets are going to enter and exit at almost similar level, you have to make money either by picking up right stocks or by buying on the correction. But be clear about your risk appetite, have your investment goals defined, and follow a disciplined asset allocation. ये तीन कर दिया तो 2023 में आपकी नैया किनारे उतरेगी.
2023 में नैया किनारे उतरेगी. विजय, the role of discipline. And these are like fundamental questions because the approach is what really matters. That is what all of you are saying. What is the key ingredient when it comes to investment discipline according to you?
Yeah, I think impatience plays a very big role there. The impatience that people have takes them away from discipline. The desire to make a quick return, a quick buck is so deeply ingrained in human behavior that the moment you see any kind of an adverse movement to your starting theses, you start becoming nervous and come out. Now let me just give you a small instance of what happened in the current year. We all talk about mutual funds, SIPs doing extremely well. But if you were to double click into this, a few quarters back, SIP was in the ballpark of about 10,000 crores a month. Today it's about 13,000 crores a month. And when you double click and look at the number of folios that were actually contributing to a 10,000 crore monthly run rate versus a 13,000 current monthly run rate, you will find a very interesting insight there. The number of folios have actually come down in relative numbers. What it seems to suggest is that the smaller retail investor has sort of got a little worried about tepid performance or an adverse performance or a market correction, and he's just stopped investing. The more seasoned, heavy duty investor has actually increased allocation. So this clearly points out to the fact that discipline, I mean the systematic investment discipline, if it doesn't match with your thesis, there is nervousness. So I think, the point that was highlighted by Nilesh, that you've got to first understand your objective, understand your risk appetite, commit yourself to that risk appetite, commit yourself to your objective, and then stay completely resolute to the process, rather than getting very nervous with every reaction that happens in the market. You have to understand, market will show its colors of ups and downs, and you've got to take it in your stride.
Absolutely. Taking it in the stride is very important. Dheeraj, whenever the economy is a bit tricky, investors take a mode of, it's either flight or fight kind of mode. The economy is a bit tricky, more so globally than in India. The message for the Indian economy is far more robust, and if you take a medium to long term view, even better. Does a tricky economy, in your view, make for a good time to invest?
If this question is in the context of if this question is in the context of retail investors, my answer to that is that retail investors do not pay so much cognizance to the macro environment. They are more focused on the bottom-up opportunities. And that's where they are spending more time, particularly Gen Z, millennials. They are spending more time in spotting the opportunities. And Basant mentioned that the information arbitrage that was there with the institutional investors is no more their privilege. And now through the social media, the excess of information is available in fraction of minutes to all investors. That's where they are looking forward to the bottom-up opportunities. So they are not paying so much cognizance to the macro environment. More so, if at all there is discussion, it's all discussion in the more dinner get-togethers and more intellectuals conversations, and nothing more than that. We are seeing that there is enhanced interest of the retail investor in the markets, and that get reflected through the number of folios, number of investors that are participating in the markets. Vijay just mentioned about the number of folios. Let me add that few data point to that. Today we have in the mutual fund industry almost 14.8 crore folios. This number used to be somewhere close to 10 crore a year and a half ago. So it's moved to almost 40%. What we have seen in the kind of accumulated number in the last 25-30 years. So that's the kind of pace we are seeing. And with the growing awareness, I think the people are increasing their ticket sizes in the investment also. So retail investors per se have demonstrated more resilience than I think even the more institutional investors.
Okay, Basant, on the same point with a slightly sort of added question, does it also mean that domestic institutions have now sort of finally come of age vis-a-vis foreign institutions in being participants and in a way holding up the markets?
Yeah, absolutely, because 2008, I think the foreigners sold about 60-70,000 crores and the market fell 60%. And this time we've just held it on. But I have a different view on this. I think domestic institutions, and Nilesh bhai is at the forefront of it, ये बाजार बचाते हैं, ये बाजार बनाते नहीं है. ये सर्किट मार के नहीं लेते हैं. सर्किट मार के FII लेता है. 5% ऊपर, 10% ऊपर ले लो. So domestic institutions give you a very cushion, a shock absorber effect, and that is because it's the retail guy who puts in money on behalf of so many of them. But I think on a longer context, 1 saal, 2 saal, 3 saal, moment people figure out that gold is only a dollar asset. Basically, if dollar goes up 3.5% every year against the rupee, that's what you're going to make in gold over the very long period of time, because इतना inflation आ गया, सोना का दाम तो उस हिसाब से कुछ बढ़ा ही नहीं actually if you look at it. So I think the shift will come, and they will come, and the domestic institutions are there for us. But I think the domestic guys saved us this time compared to 2008, 2009. At that time, I mean, the markets were falling 9 pins and nobody knew what's happening. But this time the support is there. And now think of it that once the Fed starts cutting rates, now we can debate whether it's 6 months, 1 year, 2 years. And once the FIIs come to buy stocks, share कहाँ है यहाँ पे?
शेयर का नीलेश जी, आत्मनिर्भर मार्केट्स, भारत आत्मनिर्भर है, आत्मनिर्भर मैन्युफैक्चरिंग कर रहे हैं, इसलिए मार्केट्स भी आत्मनिर्भर हो गए इंडिया के.
So one, it's not that we are against foreign portfolio investors. If share price goes up, they'll make money, we will make money. So the bread is buttered for us on the same side. We are not on opposite side. Second, as Basant Bhai mentioned, we also invest to make money. Now in March 20, FPIs were coming and telling the broker 10 lakh Reliance बेचना है. They were not putting price limit. वो ब्रोकर हमें फ़ोन करता था, सर 2 लाख रिलायंस बेचना है, लेना है. हमें भी उसकी बातों पे से लगता था कि नहीं बॉस ये तो टेंटेटिव है. तो बोला 50,000 ले सकते हैं बट थोड़ा नीचे मिलेगा तो देखेंगे. Now we were able to play a kabaddi match with foreign portfolio investors, and because they had not put price limit, we could bring markets down and continue to buy. जब उनकी selling अटक गई, market bounced back. But come October 21, those guys had also become smarter. Now they were saying 10 lakh Reliance बेचना है, but at this price. So it's a game of kabaddi. Sometimes they win, sometimes we win, but both of us are playing on the same side.
बट कबड्डी खेल तो इंडिया का है ना.
हाँ, so hopefully हम उनकी टांग खींचने में थोड़े ज़्यादा माहिर होंगे because they don't know this game as well. But there is a big fundamental change happening in market. And this is kudos to mutual fund distributors who have highlighted this buying on correction, SIP kind of values to investors. Earlier, whenever there was correction, we used to do conference call and go out to meet investors and say that there is correction, don't worry. Now when there is correction, they call us saying, Nilesh bhai डरना मत, हम लोग पैसे भेज रहे, खरीदते रहना. So game इतना change हो गया है. And you look at the behavior from March 20, in a rising market, it is SIP of 10, 12, 13,000 crore minus redemptions. So I have to invest only 1,000, 2,000, 3,000 crore in a rising market. In a falling market, it is SIP plus subscription. So 13,000 crore plus 10,000 crore, 23,000 crore. This is the first time in life when I am getting money when I want to buy, and I'm getting less money when I'm not that much interested in buying. This is all thanks to mutual fund distributors who have popularized this concept of SIP, regular investment, buy on correction, SIP top up. And as long as this maturity with investors and distributors is there, I think we will continue to play a role of shock absorber in FPI.
A round of applause for the distributors because, you know, they are hardly celebrated. They are the real backbone of the industry. Vijay, you wanted to come in on this point? Dheeraj, both. No, yes, no, absolutely. That's fine.
I just wanted to add, you know, to respond to both the observations. Shock absorber currently, yes, but just imagine. I don't think too many people imagined that this would have been possible. You know, when FIIs are selling, markets are holding, as a concept probably has happened for the first time in our living experience. If the momentum continues the way it is continuing, and there are no reasons to say it should not, and the structural undertone is pretty strong, I think it's a matter of time where even the domestics will probably start punching in a way that, you know, they start creating the circuits. Basant said that is not yet seen. Like he said, they need the money at the point in time when the markets are up. I think that scenario will evolve. It's a matter of time before it happens.
Just one quick point, Dheeraj, before you come in on this. Vijay, how much of this would you attribute to greater trust that your industry has managed to create? Because I'm looking back when I started, you used to see headlines around a scam. I broke one scam story, and one doesn't get to do that at all. The markets have improved, technology, Aadhaar, everything is practically at a touch of a button. KYC is wonderful, video KYC. Many countries, advanced economies can't even dream of doing all of that. How much of trust is also responsible for this?
No, pretty much. I think this is a game of trust. As long as people believe that, you know, their hard-earned money is that is getting put to work is in safe sort of zone, they will continue to put money. And I think the regulatory sort of mechanism that has continuously kept evolving over the years is to be complimented for, you know, achieving this kind of an outcome. Systematically, we've seen, you know, number of regulations coming under two themes. One is what are the bunch of things that we can do to prevent mis-selling. I think all the incenting to mis-selling has been systematically eliminated. And the whole set of regulations that have come have ensured that mis-selling is, tending to zero, literally. And second is, what can I do to reduce systemic risk? So a bunch of regulations which have come, which have ensured that the money in motion, so to speak, and the securities in motion are moving through safe quarters. And you don't suddenly figure out that while the money is in motion, suddenly disappears in between, or securities in motion disappears in between, particularly in a digital world. And plus, I think a bunch of regulations on the funds itself, what kind of discipline is to be instilled. It's on the one side, it may sound pretty onerous for the fund, but I think it is ensured that the trust factor, which is the core fabric of continuous supply, keeps getting built.
The same question to Dheeraj, and maybe if you could also dwell for the benefit of our viewers and audience here on the role of taxation also to keep the sector alive and kicking.
Before I talk about taxation, let me just add few more enablers to what Vijay mentioned and you mentioned, the trust. I think other than the trust, there are enablers like efficiency. And just to substantiate my point, tomorrow onwards, I think 27th onwards, we will be moving to T+1 settlement. Other than the China, we will be the second large country in the world to move to T+1 settlement, which will make markets more and more efficient also. So, trust, efficiency, and also ease of doing business. I think these are big enablers that has added more confidence for the investors and participation of the investors. I think we need risk capital for sure as in India to grow to next level. For that, we need to incentivize the taxation on equities for sure. I am strongly in favor of having a better taxation for equities and particularly long-term capital gains, because we pay STT already at the time of executing the transaction. It's a double taxation. It makes no sense to have a long-term capital gain tax on this thing. And it wasn't there. It was introduced very recently again. So that's something I think in the business today, Vijay has covered very nicely on taxation. I would recommend everyone to read that article, and I completely endorse the recommendations made by Vijay. So I think there is a need for us to relook at the taxation and make equity as more attractive investable option, and particularly make it at par with the insurance and other instruments also.
Basanji, I'll come to you because in the remaining 10 minutes I want to take one broad theme. But Nilesh, on the issue of tax policy, just a couple of months back, one of the senior most finance ministry officials told us, and we reported that as well, that the thinking in the government is that there shouldn't be any arbitrage. And then there was detail into how there is differential tax treatment. There is the likelihood of a sort of policy approach being announced rather than a step being announced in the budget in a few days from now. Regardless of what is done, what do you personally see should be done in the medium term?
So we believe there should be level playing field. A person should not be taking an investment decision based on the tax concession offered. Let the choice be on a zero arbitrage level playing field. But on capital gain tax, I want to recommend Finance Minister to plug the loopholes. I am a retired chartered accountant because I have never practiced in my life. But despite that, I can think of 4 or 5 things in which tax is being lost. So the first one is people convert interest income into capital gain through listed zero coupon debentures. This is 1 lakh crore market at 10% interest conversion and 25% tax arbitrage. That's 2,500 crore for given. All you need to pass is a regulation that debenture is debenture and whatever they pay should be treated as interest, and you can't convert that into capital gain. The second thing is ULIP arbitrage. When you switch in my debt scheme to equity scheme back to another equity scheme or debt scheme, you pay tax at every level. In ULIP, you don't pay tax till maturity. It's a 6 lakh crore industry. Assuming 30% switch is 1,80,000 crore. Assuming 10% income on that, 18,000 crore. assuming 20% taxation rate, 3,600 crore. The third thing is related to different, maturities. In equity, 1 year becomes long-term capital gain. Now, how can you say long-term is 1 year in equity? We talk about 5 year and 7 year. Real estate is 2 year. Debenture is 3 year. Mutual fund is 3 year. Can we have just one standard definition of long-term? If you do that, what is considered short-term capital gain, what is today long-term will become short-term and you will get higher taxes. Then there is STT. We are probably the only country which doesn't differentiate between trading and investing. We have same STT for delivery versus in FNO. Now we must remember that there is no future in future and option for most of the ordinary traders. So why can't we increase STT on FNO so that there is some amount of deterrence and let there be lesser STT on cash delivery? Finally, there is a cottage industry called SME exchange. वहाँ पे आपका पूरा capital gain का tax planning होता है. You can know what will be the price of SME stocks after 1 year. Now, these are all the loopholes which needs to be plugged. And this is coming from a person who hasn't practiced accountancy in his life. Now, imagine all the other chartered accountants, how many loopholes they'll be able to plug.
Perhaps
I can guarantee that they'll raise more capital gain by listening to them than increasing the rate.
Well, there's clearly a nice suggestion from you and maybe a separate chapter in the finance bill on capital markets taxation. The indication seems to be that some sort of policy approach will come through. But as we are in the last 5-6 minutes of the conversation, Basanji, I'm coming to you. The search for stock ideas. I'm sure whenever you are in an airport or a hotel or even maybe somewhere else you are asked, sab ek idea de dijiye. I don't want ideas, but for the newbie investor who has so much more information available than was 10, 20, 30 years back, what does the search for stock ideas involve?
I mean, for a new guy who's starting, he should not try and find the next Bajaj Finance, the next Ultratech and the next Infosys. Because wo next hota nahi hai, that's another wo cliche hai. But more often than not, he can figure it out, but wo exit nahi milega. Wo sab abhimanyu ban jate hain udhar. So even, I can say it's not a recommendation, it's just for illustration purposes. Aap 4 stock le lijiye. One is Kotak Bank. Nilesh ji wouldn't recommend on that. आप अल्ट्राटेक ले लीजिए, आप बजाज फाइनेंस ले लीजिए, आप डीमार्ट मत लीजिए क्योंकि पी बहुत ही एस्ट्रोनॉमिकली ज्यादा है. हाँ. ये 3 स्टॉक आप सारी दुनिया का सारे अपना पैसा डाल के सो जाइए और सोचिए कि अब आप किसी को बोलेंगे तो ही वुड से अगर अल्ट्राटेक बंद हो गया तो, अगर बजाज फाइनेंस बंद हो गया तो आपके घर के आगे आप निकल नहीं पाओगे, पुलिस लगी रहेगी. So these are such companies which you can buy and hold and still make 14, 15, 16% CAGR. You don't need any mutual fund, you don't need any PMS, you don't need any investor, you don't need any Rakesh Jhunjhunwala, but you will not become a Rakesh Jhunjhunwala. That's the problem. So these are basic big ticket investments which anybody can do and everybody should do, but वो करते नहीं है. वो अगर कोफोर्ज में काम करेगा तो वो सोचेगा मैं फर्स्ट सोर्स देख लूं जरा कैसा है. वो अगर कहीं और काम करेगा तो कुछ और देखेगा. So I mean, a dentist will look at cement companies and a cement company will look at probably biotech companies. तो ये problem है. But big ticket investing, because 99% people, Siddharth, in this market come here to beat bank FD and inflation. बट उनको पता नहीं चलता करते करते कि वो कर क्या रहे हैं. उनका टारगेट होता है बैंक एफडी बीट करना, तभी वो मार्केट में आए हैं. बट वंस यू एंटर द मार्केट देन यू वांट टू डबल इट अप इन 6 months. It doesn't happen and that's why we lose money. And just one final point, I would say what has really changed in the social thing last 25 years. So when I started investing 30 years back in college, in Calcutta, I don't know how the thing was in Bombay and other parts of Gujarat. So if you told anybody कि मैं stock market में हूँ, करता हूँ थोड़ा बहुत, they would look at you with contempt. तू शेयर बाजार करता है. But things have changed now because people can discuss stock markets in parties with elders, with youngsters, with friends, with relatives, with newcomers, with strangers, and nobody frowns and says, what? You are in the stock market? But 30 years back, if you were in the stock market, it was a perfect recipe for someone to walk up to your dad and say, तेरा पैसा संभाल के रखना इससे.
हमारा देश बदल रहा है. Dheeraj, the same point to you, and then Vijay, and then finally Nilesh.
I think there are easy names that are available, like Vasant said, but other than that, passive funds is a better opportunity. If you do not understand the market, just invest into the index fund, ETFs, and that's the best way to do it. If you get a regular income, SIP. If you have a lump sum money, put it into liquid funds and do an STP, that will work for you. These are easy and simple formulas for wealth creation. But as Basant said, that people do not follow simple, easy, proven formulas. They try to be a superheroes or superwomen, and that's where they end up losing a lot of money.
Vijay.
Yeah, I think this year is going to be a slightly difficult year for equities. I think there was a mention of where we believe Nifty could go. Our house views, we probably would see a slight increase in Nifty by the end of this year, closer to maybe 20,000. So nothing much really at a headline level. But the themes that we believe could be interesting for the year would be, in our view, discretionary consumption. That is one theme that we like as a house. Banks, private banks as a theme we like. Some internet companies have been values have corrected very sharply, so there could be interesting finds there. And capex related manufacturing, that's another theme that we could find some good up. But this is something which looks topical just now. This obviously needs to keep getting evaluated through the course.
I'm glad you mentioned internet companies, because Vijay Shekhar Sharma just a few days back at Davos told us, I was interviewing him, that they will turn profitable in September. That was the first time that he's spoken about that. Nilesh, as we wind down, this same final question to you also for your perspective.
So my recommendation is that just follow the process, be a long-term investor, be a regular investor, and please have disciplined asset allocation. And if you can't do this, then there is a product called asset allocator fund. Our asset allocator fund is up about 4 times in 10 years. If you haven't multiplied your wealth like that, then just accept the thing humbly and invest in asset allocation fund. Let the fund manager manage your money.
Can I end this by saying that what you have said, if I describe it in my words, lalach buri bala hai.
लालच बुरी बला है, वो तो सिद्धार्थ बात सही है, बट उससे भी बड़ी एक बुरी बला है, वो भय है. It is not just the greed, it is also the fear. And ऐसा नहीं है कि हमें डर नहीं लगता, हमें 30 साल मार्केट में निकालने के बाद भी डर लगता है.
और जब ज्यादा ऊंचाई पे होते हैं तब डर थोड़ा,
हाँ, बट हमारा डर ऊंचाई का आता है, नीचाई का नहीं आता.
This conversation, I could take it forward by saying डर के आगे जीत है, but somebody said नहीं जीत नहीं है, उसके आगे और दर्द है. But this is something that we could continue discussing. But the bottom line, you have heard from 4 of the best pros in the Indian markets about investing, and especially if you are a new investor, welcome to the markets, but tread with caution. Mental composure, calmness, knowledge, and faith and patience is perhaps the best way to become the next Warren Buffett or Rakesh Jhunjhunwala. Thank you very much to the entire panel, and you, the viewer, round of applause for them. Abha, it's over to you. Thank you.
Siddharth, and it was great listening to all of you together on this stage at the Market Today Summit.